Hey everyone, Dave Byler here with Equipter. Thanks for joining us. We are sitting down here with Kyle Beltle from Kaufman CPA. Kyle, thanks for coming in
Yeah.
and sitting down. So,
Yeah.
Kyle, why don't you tell us a little bit about who you are and what you do?
Yeah. So I'm a CPA. I'm the lead tax strategist at Kaufman CPA, and I get to work with small and medium-sized businesses, helping them maximize their tax savings every year. So excited to talk with you today about some end-of-year opportunities.
Awesome. That's why we're here, taxes. So let's
That's right.
talk
That's
about
right.
it. So, in a general sense, Kyle, what are the tax saving opportunities out there?
Yeah. So one of the big tax saving opportunities that you're going to want to take advantage of is Section 179 depreciation.
Okay, I know there's a lot of talk out there about that.
Yeah.
I know a little bit about it, but tell us a little bit more about what's Section 179. What does that mean?
Sure. So Section 179 is a form of accelerated depreciation. Basically just meaning you can take more depreciation than you normally would be allowed to. Typically when you purchase a piece of equipment, you've got 5 years to write it off, so you're only getting about a 20% write-off. With Section 179, you get 100% write-off.
I like to hear that.
Yes.
That's awesome.
Yes, more savings.
So, are there any limitations or anything to consider when we're talking Section 179?
Yeah, so one of the big limitations with Section 179 is the amount of net profit that your business has. Another limitation would be the amount of spending that you're doing on equipment. If you do more than $1 million of spending on equipment in each year, you may run into some caps on the amount of 179 that you can take. And then the last thing to consider is just you will need to place that equipment into service in the year you take the deduction.
That's fair. So another question that lies around tax and Section 179 is, does it matter if I pay cash or finance?
No, that's one of the beauties of Section 179. You can pay cash, you can finance the deal, but either way, you're going to get 100% write-off on that equipment.
Interesting. So you're telling me I could finance the piece of equipment and still get the tax savings all at on tax day?
Yeah. Yeah, it's great.
That's good news. So, okay, what if a customer doesn't qualify for Section 179? Are there any other options out there?
Yeah, so another option that you can consider is called bonus depreciation. Bonus depreciation is just another flavor of accelerated depreciation that you can take advantage of. Now, one thing to mention with bonus depreciation is that you don't get as large of a write-off as you would with Section 179. However, you don't have the limits on net income that Section 179 has. You don't have the spending caps that Section 179 has. And you can actually combine Section 179 and bonus depreciation on your equipment purchases there and take advantage of both strategies. So make sure you're talking with your tax accountant about what is best for your business.
That's awesome. Good, definitely some good information. And now I know that's a lot of information for me. So give us a little bit of an illustration. What kind of savings are we looking at?
Yeah.
Let's say someone's interested in the Equipter 4000.
Yeah,
and right now, we're looking at $37,800. What are we looking at, Kyle?
Yeah, sure. So let's take a situation here, Dave, where we're working with a business that's a pass-through entity, meaning that the profits from that business pass through to the owner and get reported on the owner's tax return. And let's take a situation where that owner is in the 35% tax bracket. So in this particular situation, if you're in the 35% tax bracket, you purchase the 4,000, you're actually looking at over $13,000 of tax savings here.
Interesting. So
we're talking about potentially some very large dollars, Dave.
Absolutely. Wow, that's a high number.
Yes. Yes.
And yeah, after looking at the numbers, it makes more sense. So you're when we're talking about tax savings, it's real, right?
Yeah, absolutely.
That's awesome. Some good information, Kyle.
Yeah.
So any last advice? This has been great. Any last advice for us before we go on?
Yeah, absolutely. Hopefully you already meet with your accountant every fall to do some end-of-year tax planning. If not, give them a call today, get that meeting on the books, talk with them about how this year has been going, what you're anticipating for next year so that you can work together, you can strategize on the best way to maximize your tax savings and about whether Section 179 or bonus is going to be best for your business and minimizing that tax liability.
That's awesome. Wow. Great information, Kyle. And hopefully that was good information for you guys as well. Thanks so much, Kyle,
Yeah,
for
thank you
coming
for
out
having
and
me.
sitting down. This was really good. Reach out to us if you guys have any questions about the equipment that we offer. We would love to have a conversation. And again, as Kyle mentioned, talk to your tax accountant, strategize, plan out to maximize tax savings. So thanks again, Kyle, and
All right.
we'll see you.
Take care.